Lift your lid. Welcome to Swift Talk with Sherry Swift, helping you experience explosive growth, moving from where you are to where you want to be. Say no to mediocrity and yes to the life you want and deserve. Here is your host, best-selling author, performance coach, and speaker, Sherry Swift.
Welcome to Swift Talk with Sherry Swift. I am your host, Sherry Swift. Onward in the series, All Things Real Estate, and welcome to the episode focused on the mortgage process, insight for the home purchaser, the home owner, and the realtor in the mortgage process. I am thrilled to introduce our guest today, Jon Aucutt. Jon is a private mortgage banker with Mainstreet Bank that provides specialized mortgage products to fit all of his clients' needs. Welcome to Swift Talk, Jon.
Thank you very much for having me, Sherry. I greatly appreciate the invite and looking very much forward to this.
Yeah, I'm excited about the opportunity to chat with you a little bit and break this whole thing down and talk in layman terms about the mortgage process and what it means to all of these different groups. You ready to run?
I am absolutely, please.
Describe your service a little bit for me. Tell me what it is that you provide.
I would answer that but simply by saying, obviously providing mortgages, but I think something that I do a little different is, provide more of a service. I think, educating people, people call me all the time simply asking, what can I afford? What are my monthly payments going to be? And I think the biggest key to it is just providing people service, knowledge, understanding of exactly, what they want and exactly what they want to get themselves into as far as a mortgage payment and obviously a purchase price for a property.
All right, perfect. So here's what I want to do. I want to break the conversation down and talk about the mortgage process and gain a little insight from you from the home purchaser perspective. So tell me, what have you found is most important for that home purchaser?
Understanding all the options by far, in my opinion, is going to be the most important thing. Again, everybody calls me and they say, I've seen this house, I want to get pre-approved for it. I want to qualify for this mortgage. And I sit down with everybody, whether it be on the phone or in person or whatever that may be, and explain to them, well, how much do you want to put down? Where is your down payment money coming from? How much do you want your monthly payments to be? Has somebody discussed with you taxes, insurance? One of the biggest things I don't think people go through is, what are your final cash to closing amounts, that kind of thing. So just education. People might think, and this might sound silly to a lot of people, but I still get calls to this day where people say to me, well, I don't have enough money saved. I don't have my 20% down saved. A lot of people out there don't know that there's all kinds of different products out there that accommodate people. So again, just educating everybody and making it so they can make a true good decision based on, once they get all the facts and their knowledge of all the products and programs and everything else is out there.
Hey, Jon, give me an example of one of the most aggressive products that are out there right now. Because when you say to me, it's funny because I still receive phone calls, Sherry, from people that say, I got to get my 20% together. Tell me, what does that look like today? If it's not 20%, what should people typically expect? Is there a way you can kind of summarize that a little bit?
Not to drag on for hours, because we could talk about products for hours. But I will say, kind of most standard out there is going to be a 5% down mortgage. There are other products out there that allow for 3.5% down and, 3% down for that matter. And I think that I'm one of the few mortgage people, people will always call me and say, what's the bare minimum down? Well, yeah, there's a 3% down product, and there's even programs out there that gift you down payment money. But the problem is, when you do a product like that, there's certain items that are there. PMI never goes away. You pay a higher interest rate. These down payment programs I see on the TV now almost every night, there's down payment assistance programs. Those programs are all great, and that's fine, and it helps you get into the house, I guess. If your sole focus is just, I got to get in the door of the house, fine, and I understand that. But not all those products are the best products. Understanding that, I think 5% down is kind of that's where you get a, for lack of a better word, a normal traditional mortgage. You have a normal interest rate. One of the misconceptions out there, I think, that is if you put down is 5% or 10% or 15%, you're penalized in some way. And you're not. You get the same interest rate, same product as if you were putting 20% down or even 30% down for that matter. The only difference is you pay PMI. PMI is simply private mortgage insurance. PMI in the last handful of years has very much changed, very much reduced the price of PMI. PMI is only on there until you reach 20% equity in the property. At any time when you feel you've got 20% equity in the property, either by you paying the mortgage down or a house appraising for more, you can go back out there and do a refinance or get an appraisal done and get rid of the PMI. So in my opinion, again, I think the very best product out there, if you're at limited funds down, is a normal 5% down conventional mortgage.
Okay. Wow. That's great information. So here's what I hear you saying. You're leading with consultation, Jon.
Right. Let's squeeze you in there. What do we have to do to make this happen? No, I want you to understand, yes, we can do that if that's what your desire is, but it might not be the best thing for you to do. And it might make sense to you to wait 6 more months and save an additional 1 or 2% because you're going to gain so much more at the end result of it.
Yeah. I know that this is always a number that's sliding and changing. What's the number right now, Jon, for home purchasers? Where's their minimum as it relates to their credit score?
So again, that's also too, very much program driven. So an FHA mortgage, the minimum credit score, believe it or not, will actually go down to a 580. Problem, I shouldn't say problem, but one of the downfalls of doing an FHA mortgage is you pay an upfront funding fee to FHA. That upfront funding fee is typically 1.75% of the purchase price of the property. And then you're also paying monthly PMI, which never goes away. There is no opportunity to unwind that PMI. The only way to do it is via a refinance out of an FHA mortgage.
Okay.
So that's, obviously one option. That's the lowest credit score you can get into. If you could focus on, a 620 credit score is kind of going to be your bottom to do a conventional mortgage. And that's where I spoke of with the 5% down and the traditional PMI. One thing that a lot of people don't know that I always educate people on, PMI interest rates are very, very much credit score driven. So for example, 620 might be one tier, then 630, 640, 650, literally all the way up to the highest credit score of 740.
Okay.
So yes, again, yes, you may be able to, get into a property with a 620 credit score, but let's look and see exactly why is your score that low. Is there opportunity to make it better, to get you a better interest rate to, help you afford more of a house when it comes down to it?
And do you consult people through that process, the repair process?
Certainly.
Okay. I understand that it has everything to do with how much needs to be repaired, but what do you generally see as the time frame that it takes for most people to see the increase in their credit score in order to be able to experience a better rate?
Depends upon, what it is that's actually reporting to the credit bureaus. Give you an example. I just had a client who I ran their credit 6 months ago. Perfect credit score, 700 credit scores. Everything was great. They just mistakenly missed a simple department store charge. They missed one of the payments. And it was in fact just in this month that we were in. Their credit score went down to 640. And they literally lost over 100 points by just a simple late payment. I had them call. It was, one of the big name stores that we all know. I had them call that, explain to them, look, it was a honest mistake. I'm in the middle of a house buying process. Look what it's done to my credit score. The creditor found mercy on them and said, okay, fine, we'll remove it. Gave them a letter saying it's going to take 30 days, but we're going to remove it. Some lenders, me being one of them, when we get a letter like that, we can send it over to the credit bureaus and they'll update that credit score within 3 to 5 business days.
Wow. Okay.
Now, other things, federal tax liens or, I don't know, a large judgment against you. You have to get me that satisfaction of judgment. If people provide me with the proof that that's paid off or it was reported in error, I can always get that updated within 3 to 5 days. That's a service that we provide as a bank or as I do as a lender. But, some of those things are just, if they've got, 20 collection accounts, it's going to kind of fall back on them and say, how quickly can you attack your credit and how much dedication do you want to put into it? Because I'll certainly tell you what to do. You just got to take the initiative to do it.
Got it. Okay. Jon, that I am a licensed realtor. I'm not practicing on a daily basis anymore because I have a coaching and training company, and my whole why and what for is to support realtors. Over 50% of my client base is real estate who are building big businesses. And I'm coaching them and working with them every day around their business, the challenges, the strategies on how to go from one level to the next and to go from where they are to where they want to be. And one of their greatest challenges is partnership with mortgage company that are going to provide the level of service that you're providing. So, bravo, because it's all about consultation at the end of the day, isn't it?
Couldn't agree more. That's the number one focus of it. Could not agree more.
Yeah. Now that we've kind of addressed, the home purchaser and their process a little bit, what's going to be important for them, what they should focus on, and all of the wonderful options out there for them. Let's talk about the homeowner right now, and let's talk about how you service and serve the homeowner.
What I would say about that, very simply, I've got a very strong referral base. That's certainly great. However, me as a lender, how I've built my career, one of the things that somebody taught me the business years ago, I have a whole database where I've kept every loan I've closed in my entire career, got in a database, got everybody's interest rate, everybody's mortgage amount, interest rate, and obviously their contact information. I'm constantly monitoring rates every single day. And if I see any opportunity for somebody to, take advantage of a better rate, believe me, I'm on the phone calling them. I'd be lying to you if I said, yeah, I'm sitting here literally thumbing down the list. No, I've got a computer program that monitors it, tells me where the rates are, and tells you if their opportunity falls down. And it sends me an alert and tells me to, call those people. So something like that is, a service that I provide. And I tell people that, once you close a loan with me, know that for the entire life of the loan, I'm going to consistently watch that rate and see what happens to that rate.
Oh, that's fantastic. How often are you able to impact people's loans? I mean, how many loans do you have an opportunity to refinance and adjust in their favor on a monthly basis?
So it's a very hard question to answer. And the reason being, I'm at the mercy of what the interest rate market does. When we start to see a downward trend, it is very much not uncommon for me to close, without exaggeration, to use 60, 70 loans in a month, because that's kind of my, bread and butter, where I can, if you've got a relationship with somebody and you've treated them right the first time, you call them back and say, hey, can I do a refinance for you? Rates are a quarter of a point better. It saves you $90 a month, and it's going to cost you nothing to do because I'm going to pick up all your closing fees. I've never had somebody say no, or God, it makes no sense. Why would I want to do that? It's the best service you can get, and you get to touch those people again. Right now, for example, interest rates are kind of flat. They're basically staying the same. That's just not needed because rates haven't done anything. From a mortgage point of view, or from a loan perspective, as a loan officer, I want to see rates kind of going away, up, down, because that gives me the opportunity to, call people and give them, some better advice, or, do a refinance, get rid of your PMI or something because they're down. But again, when rates are staying idle like this, there's really nothing there to do a refinance.
Yeah, it doesn't make way for much conversation, does it?
Where I have had a lot of success, really quick, people that have bought a house a year ago, put down 5 or 10%. The market has just been on fire, as I'm sure you talk about, soon. They've had tons of success going back and getting a new appraisal just 12 months from now, and getting their PMI dramatically reduced or completely taken off.
Oh, wow. Okay. So what are the refinance rules as it relates to? Are there rules connected to how soon a homeowner could refinance? So if they just closed with you 3 months ago, are they eligible to refinance, John, or
1 month ago?
1 month ago.
Again, this is how we originate, and I'll speak solely from me, because I know there are other places out there that have restrictions. Because it's our money we originate, it's our loans that we close. I'm not a broker middling the mortgage between the client and somebody else. There's no prepayment penalty. There's nothing. So you could, in theory, if the interest rate market took a dip down 30 days out, 6 months out, or whatever that may be, you can refinance it.
Okay. So that's tremendous incentive for someone to do business with you in the first place and to allow you an opportunity to write the loan. Now what happens if you didn't write the loan and they are just in a loan that they don't favor with somebody else? What's the opportunity to have you rewrite that opportunity?
Absolutely. If they call me and they say, hey, I just closed 2 months ago, here's my rate, here's my why I need to, if the interest rate market's better, great. Or maybe they thought they got a bad appraisal on the purchase, or maybe, they had to go into a product that was a short-term fit. Certainly I can refinance those people. And then again, they get added onto my system as any other, new client would, or then I'm watching their rate going forward.
Okay. Wow. What a fantastic service. I'm learning. I think that's amazing. That's fantastic.
Thank you. And you'll see many loan officers out there, they focus on purchase business. And they say, I don't want to do the refinance business, which it's just always been mind-blowing to me to find out why, someone would not want to touch that. But a lot of people are just very much focused on the purchase business, and I want to get that deal in the door and get the purchase done, and that's the end of it. Never talk to the client again, never watch rates, and that's truly the end of it.
Okay. So how much of a difference would you suggest, before we move on to the next group of people that we're going to speak to here, what's the difference that you would say this much of a mortgage difference, if it's a point, if it's a half a point? When should someone consider refinancing their product?
So it's all about closing fees. When I do my refinances, so again, I'm going to speak for me. When you close one loan with me, you pay the closing fee, you pay your title fees and your appraisal. On any subsequent refinance you do with me, I'm picking up the appraisal, I'm picking up the title work, I'm picking up all the closing fees. So you truly have zero closing fees. It's not rolled into your mortgage. It's not hidden anywhere. It's something that I truly pay. So if I can bring you to the table and save you a quarter of a point and it saves you $70 a month, but it truly costs you nothing to do.
That's a no-brainer.
You just answered how 95% of people, when I call them, that's exactly what they say to me. Tell me why I wouldn't want to do this is the answer that I get most times.
Okay, gotcha. One more thing I want to touch on before we move on to talking about how you work with realtors. You said something really relevant. If you are not a broker, can you explain to me why that's relevant to the homeowner? Talk to me a little bit about why that would be relevant.
So if I were purchasing a home and I was trying to find a lender to work with, I would only choose to work with somebody who is directly lending you their money. A broker is simply exactly what it sounds. They are brokering the loan between you and an end party. They are essentially, I don't know another way to say it, but they're essentially just shuffling the paperwork between one place and another. They are not underwriting the file in-house. They are not, reviewing the file. They're not preparing their own closing documents. Essentially, they're not lending you money. It's not as though they're going into their bank account and, writing a check at the closing, lending you their money. Banks like myself, we are actually lending you our own money. We are underwriting the file completely in-house. We are taking all the risk. We are preparing our own closing documents. And one of the biggest things that I think is huge with us, like, for example, our appraisal process. We don't have to farm the appraisal process out to a third-party company as a lot of these brokers do, or as a lot of these big banks do. If you originate a loan, say with a Bank of America or a Wells Fargo or a Chase, not that they're a bad entity by any means. However, they're a nationwide company, so they don't have specific appraisers to do an appraisal in Birmingham or Northville or Plymouth. They're just farming it out to some big company out there to say, hey, I've got an order here in this state and in this city. We as a local bank, we have very specialized appraisers who are in-house. And, we can say, okay, we've got a guy whose specialty is, again, Birmingham, and a woman whose specialty is Northville. They're going to go out there and very much know the nuances of those particular state or those particular cities, and then, again, street by street in those cities. When we prepare our closing documents, again, when we're funding our own money, I don't have funding conditions at the closing table. I mean, the money's there because we've already, taken all the risk. We know it's a good loan, so we don't wait for anything to be signed. So we've already sent our funds out. It's one of the big things that's different that a lender does over any other broker or anything like that.
Thank you for that definition. That's huge. And I got to tell you, from just the local appraiser specializing in that local specific area is a deal maker, literally.
It's probably the top reason why I work where I work at Mainstreet Bank, for that exact reason.
Okay, because that's a deal maker or breaker right there. Okay.
No doubt about it.
So that transitions us right into the conversation of how you work with the realtor in the mortgage process and what makes you different as it relates to working with people in the real estate industry. Talk to me a little bit about that.
The biggest thing I would say about that, again, is going to be service, keeping people informed. If you've got, you tell people from the clients to the realtors to whomever you're working with in that transaction, it's just keeping the level of communication open. I hear a lot of loan officers out there, I call it gimmicks, but they have, computer programs that every time your file moves to underwriting, it sends you an update. Every time the appraisal's been ordered, it sends you an update. To me, I don't need to do that. I'm calling everybody if there's a problem. If I can't get a hold of a document or something, I'm calling people, saying otherwise the loan is moving along fine. I don't bother them unless there's a problem or I can't get to something. Otherwise, the deal is moving along smoothly. That's just the relationship that I have with the people that I work with because they know that's how I am. If I don't know the agent, then I am giving them an update. I'm calling them. I'm a big call you person. I don't just send out an email and hope that everybody read it. I'm one of the people that picks up the phone. I will call you and say, here's what's going on. Here's where we are. Right down to the closing table. I always call every realtor, and I don't care if it's a realtor that I've done business with for 20 years. I say to them, everything is good. Your client has all their final numbers, has their final closing statement. They know everything. Just small things like that just seem so small. are so big, and it's so easy to set yourself aside from somebody else by just doing small things like that.
Absolutely. What's your underwriting time right now? So when a realtor comes to you and they say, okay, we're writing this purchase agreement and we need to fill in the number in the purchase agreement, what's the average for your time in underwriting?
We have 5 in-house underwriters. You tell me how quickly you need to get a deal done. I mean, I can truly, without exaggeration to you, we can pull off a deal in 2 weeks if I really, really have to. I will pull that file and put it in front of anything else. I had a client call me for a realtor referral, called me Monday of last week. Long story short, and I answer that question with underwriting and whatnot as quickly as the client can get me everything that I need, and as quickly as I can underwrite it. Again, I do things a little differently too. When I ask for documents up front, I don't just say, well, send me a random pay stub or send me a random this, and we'll see how it looks. I ask for the whole package up front. I would say 9 out of every 10 of my files, when it comes back from underwriting, doesn't have conditions, because I've got my team set up where my assistant, who asks for all the documentation and everything else, she's actually an underwriter. In her previous life, she was an underwriter. Okay. She knows exactly what case by case what's going to be needed. So she asks for that up front. When a file hits underwriting is only a couple hours for an underwriter to review it. 9 out of 10 files, at least of mine, come back with no conditions because they've already been dealt with up front. They don't even get submitted to underwriting until everything's been met. There's no reason to put it in underwriting to come back and, I always say, play this game of tennis back and forth with people with conditions. I ask for everything up front, and then underwriting is as quickly as everybody can get anything back to me, no more than 1 to 2 days.
Okay. All right. What's the percentage of your business that's referral based, Jon?
95.
Wow. Okay. So 95% of the business that you do is coming from, if I understand this to be correct, is either coming from other homeowners who have referred new homeowners to you or from realtors that are referring their buyers.
Yes. However, I also, previous to me getting into the mortgage industry, I didn't, go to college and come out and say, God, I really want to be a mortgage banker. I actually was a financial planner. Worked at one of the big wirehouses. That's what I wanted to do. That's what I got my degree in. I went and got all my licenses and whatnot to do that. My point is I still have a giant referral source from financial planners and a giant referral source from attorneys and a giant referral source from CPAs. So I would say to you that realtors are probably, believe it or not, 30 to 35% of my business.
Okay. If you could give out a piece of advice to a realtor about what is the most proactive way to work with a lender, or what do you think is the most proactive way for your realtor partners to work with you? How do we proactively show up in this relationship so that it makes your job and your role easier? What would you say that is?
I don't know if this is the right answer or not. Very simply, a lot of people don't return calls, aren't on top of things. I am a very, very A-type personality, and I'm one of the few. What I will say, a lot of struggle that I see a lot of lenders have, and even I see it in my own office. You have a problem come up with a file from someone not giving you, a bank statement, or there's an addendum needed. And loan officers hide from it, and they wait 5 days to call somebody and say, hey, we need this. I've also learned, too, it's all about delivery. I've got my staff trained, if you need a bank statement or if you need a pay stub or something, you don't call someone and say, God, I need this or your loan's not going to close. I see so many people ask for things like that. And you know better than anybody, it's all about perception and how you ask somebody. I've learned, we're approved. I just need one more small thing and we can schedule the closing. I just need this. And I get it within 10 minutes. Realtors just, you call, when I call you, I want to get you to the table with your deal as badly as you do. Don't take 3 days to call back. Don't take 5 days to, get me an addendum. When it's in front of me, I want to get it clear to close and I want to get you to the table as quick as possible. That's the biggest struggle I have is I can't just, if I call you, and even if I call a lot of people and say, I need this, this, and this, great, I can't just let it go. I got to keep that on my list and wait for it to come and then remind you 2 days later and then remind you a week later. And now, because the problem is now I say, well, now the closing's got to be delayed because I didn't get this, this, and this. And I got to say, remember when I asked you for it a week ago? So that's a struggle that I don't need that I have very often.
Gotcha. So we are a nationally syndicated podcast and, people are listening from on iTunes and Spreaker and Stitcher and iHeartRadio. And are you writing loans? Are you licensed to write loans nationally?
So we're a fully chartered FDIC bank, so we can write loans in all 50 states. And the answer is yes.
Okay, perfect. Wonderful.
And I have little weird followings throughout got a weird following in California and Florida just of, past clients. And it's just amazing how your fingers reach out throughout the years and you get these little weird followings of people in different states.
Isn't that beautiful when that happens?
I love it. It's great.
At Swift Transitions, we're experiencing the same type of stretch, and we're having a great time with it. So I can completely relate to what you're saying. One more quick question before we transition into closing our conversation down here for the time being. What is the big difference that a realtor is going to experience in working with you and working with another lender to get a deal closed?
Very simple word, service. Are rates going to vary from lender to lender? They shouldn't. I mean, if they do, it's going to be a nominal amount. Everybody can offer you, in my opinion, a very close to the same rate. Everybody can offer you very close to the same closing costs. It's going to be service. I'm going to follow up. I treat each loan as if it were my child. And I laugh, but I say that on every single deal. I treat every deal as if it were my last deal. I don't care if it's a referral source that I've had for 20 years or 2 days. I treat them all the same. I literally live and die by, because you're only as good as your last deal. When I die, it's going to be on my tombstone. You're only as good as your last deal. It's truly, I've learned in this business, you can have 20 great transactions. You have one that's just a little bit hairy or a little bit sideways. That's all people remember. So I've very much learned that.
What are the rates today on October 2017?
A 30-year fixed is, they're in the low 4s. 15-year fixed rates are in the mid 3s. It's a hard question for you to answer because, again, credit score driven. What are you doing with is it a purchase? Is it a refinance? It's a very, very hard question to answer because there's too many variables to, say one way or another.
Sure. What's the projection right now? Another really hard question, but a lot of what's on people's minds right now in the market that we're experiencing, that the real estate industry is experiencing right now.
I think that rates very much need to go up. The economy needs rates to go up. Problem is the government has themselves in a very, very tough spot we've had a taste of low interest rates now for 10 plus years. From an interest rate point of view, I watch it in my business. Like, for example, just, about 2 weeks ago, rates dipped below 4%. I mean, the difference between 3.875 and 4% is probably $10, $12, $17 a month, something like that. Mm-hmm. But in people's psychological mind, it's, oh my God, rates are below 4. We've got to get back on the bandwagon again and start looking again. Do I think rates will go up? I think a lot's going to depend on this economy. If there's lots of talk of all this turmoil with war, potentially that kind of thing, the minute you hear anything at all about anything negative war-wise, anything negative economy-wise, immediately rates take a dip down. The more positive, like just for example, look at today, the stock market. I mean, we've had numerous days up, 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 up. Rates have done nothing but tick up. You watch, the minute we have anything bad here, you'll see rates take a pause. Rates are very quick to go up, very slow to come back down no matter what happens. Again, rates need to go up. I don't think there's going to be, there's far more pressure for rates to stay the same or even go down slightly than go up. I think it's going to be interesting to see what really drives rates up here in the future.
Okay. It's going to be interesting to watch. And, as we watch it, I just want to say we will reach back to you again if anything changes drastically, because we'd like to have an educated conversation with our listeners to talk about how things are changing.
Would welcome that. Absolutely.
Okay, perfect. So thank you, Jon, for being our guest today. How are my listeners going to find you in order to procure your service?
Very simply, email, J Aucutt at msbmi.com, and that's JAUCUTT at msbmi.com. Again, I always say, my cell phone's always the best way. I will always take calls, 24 hours a day. So that's always the best way for anybody to call at any time. So 248-231-7606.
Fantastic. Thanks again. To our listeners, I am so grateful that you are here with me on this journey, and I want to invite you to connect with me on Instagram at Swift Talk for upcoming episodes and series and for an opportunity to win a free coaching session. Visit me on my website at www.sherryswift.com to read my blog on this episode and to receive a bullet-pointed recap of this episode. And then let's be friends on Facebook. You can find me me at Swift Transitions. Please write to me at swifttalk@sherryswift.com. Tell me what you thought about this episode, your personal experiences, and then tell me if it's okay to share your letter on the next episode. I appreciate that opportunity. Comment wherever you're listening and tell a friend, because my goal is explosive connections in order to be a life-impacting resource for many. Bring somebody along. Life is delicious, my friends. Let's enjoy a great big old slice of it together. Till next time.
You've been listening to Swift Talk with Sherry Swift. If you would like to schedule time with Sherry, download the show notes and much, much more. Find it all at www.sherryswift.com.